Welcome everyone to the Sustainability, Risk Management and the Future of Seafood webinar, hosted jointly by WWF and Global Canopy. Now, the webinar is due to last for an hour, during which time we hope to cover the planned agenda, which very simply is an introduction from WWF and Global Canopy, and then followed by panel presentations from our four panelists. So as a it's quite a full agenda, and we're not anticipating any time at the end of the webinar for Q&A, but we can see how that goes. Just as a matter of housekeeping, if I could ask everybody listening into the webinar to make sure they are muted, and then obviously for our speakers, just make sure they're muted at the time that you want to speak. So before introducing our panelists, I wanted to take a brief moment just to highlight that during this webinar, we will preview ahead of its launch the new and enhanced version of Global Canopy's policy benchmarking tool that will be hosted on the Script platform towards the end of January this year. We are particularly pleased to announce the inclusion within the policy benchmarking tool of a new framework for seafood, which is designed to support financial institutions in the development and enhancement of their organizational policies that relate to exposure to the seafood industry. In addition, we have also published a financial institution guidance document for sustainable seafood production and a briefing on the business case for sustainable seafood. And both documents can be found on the Global Canopy website, www.globalcanopy.org. So we are delighted, as I say, to be joined on the webinar by our panel, and very shortly we'll be hearing from them as they set out key sector and company perspectives around seafood production and sustainability. So in the order that they will be speaking, we are joined by Goyan Nikolic, Senior Industry Analyst, Food and Agribusiness Research and Advisory at Rabobank International. Dr. Darian McBain, Global Director of Sustainable Development at Thai Union. Samantha Bromley, Director, Environmental and Social Risk Management at Standard Chartered. And Naomin Tan, Sustainable Finance Engagement Manager at WWF in Singapore. Ahead of hearing from the panel, though, Lucy Holmes from WWF will make a few introductory comments before you'll hear from me again with a brief high-level introduction to the soon-to-be-launched policy benchmarking tool on Script. So with that, I'll hand over to you, Lucy.
Thanks, Chris. Hi, everyone. This is Lucy Holmes from WWF. I'm going to do a very brief introduction to the importance of seafood and its risks in terms of sustainability. First of all, I hope everyone can hear me. And if not, perhaps Chris, you can let me know. So just as a starting point, I want to emphasize how important seafood is as a sector. And generally speaking, seafood is quite poorly understood as a food commodity. But as you can see on this slide, the production, processing, distribution, sale, and marketing of seafood is actually of global economic importance. In 2016, being worth around $362 billion US. It's also critical to food security, providing over 3 billion people with a significant portion of their protein in their diet. It supports livelihoods of millions of people, particularly in developing countries. And as one of the most highly traded food commodities, demand for seafood continues to increase. Therefore, this is a sector with huge opportunity. If I could just remind everyone to mute their phone, that would be great. Thanks. But as we also know, seafood is a very risky sector in many ways, and it can have very significant negative social and environmental impacts if it's not undertaken in a sustainable manner. Some of these impacts are shown on these two infographics here. This is taken from our report, the 2050 criteria, which you can find on our website.
Hi, Lucy.
Yeah.
If I could just interrupt there. I think somebody who's just joined the call could.
That's better. Great. So some of these impacts can be seen on these infographics, but largely speaking, overfishing, illegality, pollution, habitat destruction, to name but a few, can have a significant impact on the sector and its future viability. These impacts are a growing part of the risk profile of the seafood industry, and they can lead to operational, market, legal, and reputational risks. But they can also be managed. And more companies are taking important steps to minimize their exposure to sustainability risks by increasing support for example, certification of production units, improvement projects, establishing high levels of traceability and transparency, for example. So, what we'd like to highlight in this webinar is that in order to grasp the opportunities presented by a sustainable seafood sector, it's critical that environmental and social risks are identified, managed, and mitigated. They do represent material risks. To support companies through the transition, banks and investors need to understand better their own exposure to risk and how to talk to their clients about managing these. In our view, for the future for our planet and our sustainable economy, WWF wants to see aligned capital flows with sustainable production of food, and in this case, seafood. And robust sustainability policies are a critical first step on this journey. So new tools such as Script, which Chris is about to tell us about, are a fantastic first step on that journey to help support banks through this process. So I will now hand back over to Chris, who will talk us through the Script platform.
Great, thanks, Lucy. Yeah, so slide 5. So Script. Script is Global Canopy's soft commodity risk platform. This is a new and freely available system to help financial institutions understand and mitigate the environmental and social risks associated with financing companies in soft commodity supply chains. The platform provides tools and guidance for financial institutions to establish a robust, sustainable financing policy and to screen their portfolios to determine the companies and issue areas that pose the greatest risk to their institution. So new users to the platform will need to register on Script in order to be able to access the available resources. And the registration process will take about 2 minutes to complete, and Script can be accessed via www.script.finance. Next slide, please, Lucy. So there are, currently 2 tools hosted on Script, the policy benchmarking tool and the portfolio risk tool. And I would encourage you, if you're not already registered, to sign up and to explore the platform to see how it can support your needs. But for the purposes of this webinar, we'll be focusing on the policy benchmarking tool only. So the policy benchmarking tool assesses the strength and quality of a financial institution's policy against those of its peers in order to identify areas of excellence and opportunities for improvement. The custom analysis and subsequent guidance provides information financial institutions can use to quickly improve their policies and to promote areas in which they lead. Slide 7, please. So the first step in using the policy benchmarking tool is for the user to select their commodity of interest. Currently, we have 5 commodities available to the user: cattle products, palm oil, soy, timber products, and new seafood framework. All commodities, apart from seafood, can be accessed at the same time. In this case, you can see that seafood has been selected by the user. So within the policy benchmarking tool, which will be launched at the end of January 2019, users are able to select from a more detailed range of peers than is currently available. Firstly, by region, as you can see in this instance on the right-hand side of the slide. So we'll have Southeast Asia covered initially, and then by country. This ensures that users are able to compare their policies against the most relevant set of peer financial institutions. Once a peer group has been selected, the user will then answer a number of questions designed to determine the robustness of their sustainable financing policy. The questions cover an array of environmental and social issues, including labour rights, protection of important ecological areas, and consideration of animal welfare, as well as the degree to which the financial institutions have robust implementation processes in place. Next slide, please, Lucy. So once a user has successfully input details about their policy, the system will provide the user with a policy assessment score and also run the comparison against their peer group. The user is able to select peers by country and financial institution type. So, for example, banks, asset managers, asset owners, which automatically updates the peer score in the policy performance table, as well as visualizing the relative strength on the radar chart. Live peer group data will, of course, be available when we launch the tool later this month. So next slide, please, Lucy. So having compared their policy against their peers at the summary level, users are then invited to understand in more detail the rationale behind their policy score. The example slides on slides 9 and 10 offer an insight into the total points available for each of the indicators, and in the far right column, quantification of the percentage of their peers that have a stronger policy in each area. So if you just move on to slide 10, Lucy, we can see that here the aquaculture subcategory has been broken out into the individual indicators, which are rolled up into that subcategory. So if we look at slide 11, that's great, thank you. So based on the policy information received, the tool will automatically generate recommendations around priority issues, bringing to the fore areas where policies are weak, and in particular those where peers have more robust approaches. And slide 12, please, Lucy. Finally, from me, slide 12 shows the indicators that are contained within the policy and strength subcategory, where most of the points available under the seafood framework are. And to this gives you some idea of the issues that are covered. You can find a lot more detail on this in the methodology documentation that you will find in the guidance and resources section on the Script platform. So that is a very brief introduction to the policy benchmarking tool on Script. As I say, it'll be available live later this month. So now to our panelists. So just so everybody on the call is aware, we have put 3 questions in advance to each of our panelists, to which they will talk to for 10 to 12 minutes. So these questions will be on screen during each presentation. And first up, we have Goya Nikolic from Rabobank with a seafood sector specialist's perspective. Over to you, Goya.
Hi, can you hear me?
Yes, we can hear you well, thank you.
Good. Yeah, hi. So I'm Goya Nikolic. I'm the head analyst for aquaculture, fisheries, and seafood for Rabobank Group. I've been doing this since 2005, so 13 years now. Let me get into it right away. So the first question is about the evolution of sustainability within the financial industry in the sector. Well, first of all, sustainability as a concept is becoming more important to individuals, to retailers, and to our clients, which are the seafood companies, the processors of fisheries and aquaculture companies. But maybe closer to home, sustainability is also becoming more important for banks and for investors, because we are being ourselves more closely evaluated as how we make investments. And we basically look at the sustainability primarily from a risk perspective, so analyzing what it could mean for let's say preventing loss of our loans, but also for creation of sustainable financing options, such as green bonds, for example, or maybe in aquaculture or fisheries you can call them blue bonds. We in fact did one of these in Chile a couple of months ago, and with that in view, listed seafood companies are also being more and more interested in sustainability, because they can perhaps get lower cost of financing, or their shares can be put into certain sustainable funds. So let me move to question number 2, and basically that's about some examples how we understand sustainability in the context of risk. Well, let me tell you how we implement sustainability in our organization. It's roughly in 2 different ways. So one way is where I'm responsible for, which is sustainability as a business risk. We do this part of the credit process, and it's quite simple. I mean, a quota which is well managed, the sustainable and certified, is the quota that you can lend against. It's a quota that has a value. So understanding the sustainability of the fishery directly relates to how valuable these assets are. Also, well-managed fisheries will have a better long-term cash flow and better long-term profitability of the fishery involved. And lastly, if you behave badly and don't respect your employees or the environment, and you sell to a European or North American retailer, the chance that you will not be able to sell to these retailers is quite high. So again, that's a risk. So from that point of view, we analyze. There is a separate sustainability department as well within our bank, and they follow a similar procedure that was outlined just before. So first of all, we have policies, sustainability policies. We have one for each sector. In seafood, we have 3, one for aquaculture, one for wild catch, and one for seafood processing. Here it's outlined what are the key important things to look at, such as overfishing or benthic ground impact, or things that we definitely don't do. Things that, for example, we do not finance cetacean catch, like whales, or we don't certain type of longliners, which use very long nets, very long lines, we don't do. So there's a list of things you don't do and a list of things you should really pay attention to. Then based on these policy papers, they have designed a sustainability assessment. The sustainability assessment goes through a number of stages where different things are, and finally you can get a grade. I believe it's something from A to D, the ranking of the assessment, and that's being reviewed annually. And eventually, with this type of assessment, you can also, on one side, identify the risk, but you can also use it for the creation of these sustainable, let's say, finance products like green bonds and etc. that you can put into portfolios. So I think that's I'm going to finish on point 2 with that. And lastly, the question is about what are some of the actions that companies can take to lower their exposure. Well, let me just use an example here. For the last decade or so, Rabobank has cooperated very closely with WWF. Maybe perhaps the next speaker will also mention it, and the Chilean salmon industry. So what we had done there is we co-organized roundtables with WWF to bring all the CEOs of the largest Chilean salmon companies on the table to talk about sustainability. Now, this might sound easy. Actually, it's very difficult. These are very competitive sectors. These are rivals. They don't want to share information that could be seen as advantageous. But together with WWF, we managed to put everyone on the table. We managed to get people to put their differences aside. And later, the CEOs themselves, they cooperated. They agreed to commit to certain standards For example, they committed to ASC, which is the standard for sustainable aquaculture, and then to this day they continue making improvements as a group. So I think these kind of roundtables, communication and commitment of companies as a group at CEO level is a good example of what companies can do to lower their sustainability risk long term. So that's all for me. I think I managed to keep it nice and concise and within the time limit. So I'll leave it to the next speaker, and perhaps we'll have time for some questions later. I don't know.
That's great. Yeah, thank you very much, Goyam, for that, and for keeping well within your allotted time. So perhaps we can move on to our next panelist, and that is Darian McBain from Thai Union. Darian, over to you.
Hey, everyone. Thank you. Hello, everyone. I hope you can hear me. Is that fine?
Yes, we can hear you, I think.
Awesome. Thank you. Well, thank you for the opportunity to be here today. So I am the Global Director of Sustainable Development for Thai Union, and I joined Thai Union pretty much at the time that the EU-IUU yellow card was placed on Thailand. So I'm talking to you today, still kind of reeling and euphoric that the European Union has lifted that yellow card off Thailand. So that was big news of yesterday. So addressing the different points each, actually I should just explain, for those of you who don't know Thai Union, it's one of the largest seafood processors in the world. So we're a processor, we don't own vessels, we don't own farms, but we process a huge range of seafood. We own brands throughout the world, plus we co-manufacture for most of the major retailers and food service companies around the world. Plus we do other food, pet food, etc. So looking at the first question, we have our overarching sustainability strategy is called Sea Change. And the question is asking us from our stated commitment to sustainability as a commercial business, how do we view sustainability? So Thai Union very much views sustainability as a way that we differentiate ourselves from competitors. We say that we have two differentiating pillars. One of them is sustainability and one of them is innovation. And that really has a massive culture change on the business, but also how we talk to our customers. So Sea Change goes across the group. It's a strategy with four main pillars. So safe and legal labor, which is very much around human rights, responsible sourcing, which is about our supply chains, traceability, knowing where we're sourcing our product from and the different aspects on environmental and social criteria within that, responsible operations, which is the more traditional occupational health and safety aspect of our factories. We have 19 different factories around the world. And lastly, people and communities. So how do we work with our staff, with the communities in which we operate, and work on more global problems? Ocean plastics would be a good example of that. So through that strategy and continually developing the strategy, rolling it out to our businesses, it's really had a great impact on Thai Union. We've recently, in the last few years, received many awards for our work. And in 2018, we were named #1 in the food products category of the Dow Jones Sustainability Index. And for those of you who know the DJSI and the assessment criteria, it's very in-depth. So it goes into everything from your tax position to the number of female executives to your environmental performance to your strategies from emerging markets, just to name a few. And so to get to #1 in a relatively short space of time through our focus on sustainability, I would say it really has transformed the business, and it does guide decisions. I'm part of our leadership team. So it is definitely about the way we do business, and that seafood business should be sustainable. And I would say in no other business is it more obvious that if you're being unsustainable, you won't have a business. For example, from our wild capture part of our business, if fisheries are overfished, if there are literally no more fish in the ocean, we cannot have a business. So we have an inherent interest in making sure that the seafood that we are buying and serving to our customers is sustainable. So looking at the next question, can I give you some examples of what Thai Union have done to decrease our exposure to risk, sustainability risk, and why? So we have a very strong risk framework. I would say, I guess I come at this from a risk perspective. We have a strong risk management committee. And from identifying where those risks are, we look at the different strategies. And because the previous speaker mentioned it, I think collaboration with partners has been absolutely key to understanding the risks and reducing those risks. So we do collaborate with WWF. We have on our wild capture seafood, and indeed it's set our overarching tuna commitment, which is to purchasing tuna that come from fishery improvement projects or are MSC certified. And we think that is so significant. We've invested $90 million in initiatives over several years, because if the tuna isn't sustainable, if the fisheries aren't sustainable, we simply could not continue to have a business. And it's in our interest to collaborate with partners, with our competitors, with governments, to make sure really that the governance of those fisheries is really in place. Another one which I think you could look at both sides of the risk is we are headquartered in Thailand. Thailand, as I'm sure most of you know, has been really in the front of mind of many people when looking at sustainable seafood and seafood risks. We had an option that we could have stopped sourcing from Thailand. Actually, globally, we get less than 2% of our fish from Thai waters. But we made a conscious choice to stay engaged and improve the processes, work with the government on regulations, work with our competitors. And I think that's a really important part of sustainability risk, that you engage rather than completely withdraw. And I think it's relevant to the investment discussions as well. Some of our other projects, we've invested in technology heavily, so electronic catch documentation, digital worker voice at sea. On the aquaculture side of things, we've invested heavily in wild capture fish-free feed, so that's looking at responsible feed. I've mentioned about the FIPS. Vessel audits is another big one. How do you know what's actually happening at sea and on the vessels? So we've created a whole vessel improvement project and vessel audit program around that. Some of the other tech looking at blockchain, electronic observers, the previous speaker mentioned. I think about longline vessels, so trying to improve the human rights observation on longline vessels, and having a much greater focus on worker voice. So if a worker does have a problem, how can they contact someone on land to raise that kind of alarm? So moving on to the last question, how does sea change feature in conversations with our lenders and investors? So I can say it certainly featured heavily when we were in the news and when Thailand was in the news. So Thai Union is listed on the Stock Exchange of Thailand. For probably the first 2 years that I was with Thai Union, I went to every quarterly investor briefing and gave an update on sustainability, particularly when there were points such as Greenpeace launched a global campaign against Thai Union, keeping our investors up to date on what we're doing, how we're mitigating the risks, what plans we have in place, and our progress on those plans was extremely important. As more trust has been built up in our system to manage our risks, and we have reduced our risks, we've probably toned that back a little bit, although we still have quarterly investor bulletin that always has at least one page dedicated to different sustainability news. Large, particularly institutional investors, we will engage with one-on-one. So I will have a meeting with them, they will have their specific questions, we'll address those questions. Some of the opportunities that has brought about to the business, I would say we've had discussions on green bonds and blue bonds. So our track record has helped with the discussions of should we set up one of those bonds? And it's certainly something that I'm very interested in doing, or ocean financing. We've also had those discussions with WWF. I see this as a very exciting opportunity, particularly when you're looking at the oceans and where you're suffering from tragedy of the commons. So many people sourcing from fisheries. How can we use that collective with financing to really help drive improvements? I think it's helped when we have needed to get more support from lenders if we're doing other business aspects, that we can show that risk reduction in our business, so for our lending practices. And then slightly outside the finance area, it's definitely helped with engaging with our customers and with regulators. So I think I've reached my 10 minutes, so thank you. And again, hopefully we'll get a few moments for questions at the end.
That's great. Thank you very much, Darren. That's extremely helpful. And thank you for sticking to the allotted time as well. So if we can move on to our next presenter, our next panelist, Samantha Bromley from Standard Chartered.
Hi, Chris. Thank you. Can you hear me okay?
Yes, I think we can hear you.
Yep, perfect. Okay, so I'm just going to talk through a bit more about sort of practical implementation of policies from a banking perspective. So what I'll do is just take you through the 3 questions that you can see, which is basically how Standard Chartered approaches sustainability generally, how we've then applied our sustainability principles to the fisheries sector, and then just a few sort of examples about the challenges of actually implementing that and ensuring that our clients are operating in a sustainable way, and that as a bank we are helping to support sustainability in the fisheries sector. So just to begin, I will just give you a bit of an overview really of the environmental and social risk process that we have at Standard Chartered. So we have a set of sustainability principles that we follow. These are largely underpinned by a set of external position statements which are on our website. And these position statements really focus, I suppose they're risk focused. So they look at what we call sensitive sectors. So they set out the standards that the bank expects of clients in particular sectors that have heightened environmental or social risk. So that might be things like oil and gas, mining, forestry, palm oil, but obviously also includes the fisheries sector. So alongside those position statements which set out our standards, we also have what we call a prohibitions list. So this is the sort of hard line as a bank that we have, which says what we will and will not finance. And I'll talk a bit more about the specifics of that in terms of the fishery sector. So just to take you right back into how we developed our policy that we currently have for fisheries. Initially, what we did is obviously looked at our big framework and then said, okay, so now what does sustainability look like in fisheries? So obviously we needed to understand the sector. So for that, we drew on a lot of the resources that have already been mentioned on this call. We looked at things like the WWF resources. We looked at UN guidelines, such as from the FAO. We looked at certification systems. So what was, MSC requiring of their members. We looked at sustainable practices in fisheries, and we looked generally at what is the best practice, because this is what drives our policies. We want to understand what is best practice in this sector, and then how can we translate that into policies that we expect our clients to meet. So that was our starting point, understand the sector. And of course, the main thing about that is to understand what are the key issues, and therefore how does that translate into the key risks that we want to address. Now, obviously key issues, people are familiar with on this call. So,
a lot to do with things like overfishing, the biodiversity issues, bycatch, all those sort of things. So we drew up a list of what the key issues were, and how we can ensure that our clients are managing these things. So that was the second step. Once we understood the sector and the risks and the issues involved, we then obviously had to bring it down to, what does this mean for Standard Chartered? So how do we then look at our own fishing portfolio, and what does it mean to us to manage these particular risks? So just moving on to the second point, comes on to the challenges. Basically, what were the challenges in actually now originating a policy and then implementing it? So what we did first was look at which part of the value chain do we want to target. Do we want to look at the upstream, midstream, downstream? Now, obviously, most of the issues in this sector are to do with upstream, the wild capture fisheries. But when we actually looked at our portfolio, we realized that the vast majority were in the midstream. So we're in the processing, canning, and product manufacturing sector. So that did influence how we targeted our policies. And it also, we realized as a bank that we didn't have a huge appetite necessarily for doing too much in the upstream, that we were focused more on the midstream. But nevertheless, we need to look at that whole value chain to make sure we're managing things sustainably right from the beginning of the process down the supply chain, to downstream. So the next thing we thought about is, okay, how wide do we go in this? Obviously, fisheries is a huge sector. Do we focus on the wild catcher stuff, or do we look at all the different elements of fisheries? And what we decided was that, although there are many aspects, we, again, looking at our portfolio, really wanted to narrow it down to look at where the risks are. So we focused on wild capture fisheries, so the upstream part, and also at the canning and processing plants. So that was where we focused our criteria development on. And this was where I think the script benchmarking tool really helped us, because once we decided where we want to target our policies, we then started looking at, okay, so what are our peers doing? What are the expectations on banks? What are the areas we really need to look at? I mean, when you look at some of the script stuff, there are huge amounts of criteria in there. So it really helped us take the macro view in terms of, okay, we want to address, I don't know, bycatch or something, to then really break it down into, okay, well, how do we actually do that? What questions do we need to ask our clients? What specific expectations do we need to have of them? So these sort of benchmarking tools were extremely valuable to us in just making sure that we were, A, meeting expectations of sustainability groups, and also just to give us a greater understanding of the specifics of how to roll this out to clients. The next point we looked at was, okay, we've now developed a set of criteria. How do we actually implement this, and how do we make sure clients are doing it? And this is by far the hardest part, obviously. It's reasonably easy to write a well-informed policy and say, okay, we expect our clients to follow this policy. But actually then, how do you actually make sure they implement it? And this is the last piece that I want to talk about. Now, the simplest way, to be brutally honest, is to make sure that all of our clients follow a certification system such as MSC or ASC, because then a lot of our monitoring work is actually done for us, and we know that if that client has reached that certification, they are abiding by our sustainability principles. I mean, obviously, the whole reliability of certification systems is another discussion, which I am not going to have now. But it's a very, very good tool for to give us an indication of how sustainably our clients are operating. However, as I've just as I talked about earlier, a lot of our clients didn't fall. They fall in the midstream, in the canning and processing, and obviously there is a chain of custody certification scheme that MSC do, and so do other certification schemes. But when we looked at our portfolio, we realized that most of our clients actually were not part of that. And obviously, certification systems only currently meet a small part of the overall global market for fisheries. So we then had to think, okay, well, can we take some of the recommendations for the certification systems and make sure that our clients are initially meeting that, and then give them the target to achieve certification within a time-bound plan. So this was, part of the thinking we went through, and where that developed onto, and we have just released a new position statement this year, was to decide that system was okay, but again, we felt it wasn't strong enough to address the real risks in the wild capture sector. So what we then sort of moved the policy towards was to say, okay, the highest risks as far as we're concerned to sustainable fishing is in the wild capture, the upstream part. So there we are going to insist that our clients get certification from a relevant body. So we decided that actually that was going to be the hard and fast rule, and that we wouldn't deviate from that. When it came to the supply chain down into the canning, processing, trading, whatever, we would expect the companies to have a sustainable sourcing policy that incorporated all the key elements from those certification systems to make sure they were still supporting the process and were making sure that the fish that they were sourcing and we were therefore supporting through funding was sustainably sourced. Obviously, ideally with certification, but if not, they had to meet a set of guidelines that aligned it with the certification systems. Now, I'm aware that I have just reached my 10 minutes, so I will just finish with one challenge that we had, just because I think it's an interesting look at how it's very easy on paper to do all this stuff, but how do you actually cope with the nuances of implementation? And one of the issues we had is, as well as the criteria, as I mentioned at the beginning, we have a prohibitions list. So for fisheries, those prohibitions included things like, under absolutely no circumstances whatsoever would we finance things like shark finning, deep sea bottom trawling, drift net fishing, fishing with explosives and cyanide, things like that. The key things that is widely understood in the industry to be, extremely damaging. So we then looked at, okay, well, if we have that restriction, what if we're being asked to provide finance for a string of restaurants, 2 out of 100 of which happen to serve shark fin? What do we do in that scenario? What do we do with a set of supermarkets who 0.1% of their products are shark fin? So there are a lot of challenges, as you can see. There are a lot of challenges, as you can see, in how to actually bring that through, and that I think is the area that we continue to work on going forward, and to continually expect our clients to up the standards as we go forward in eradicating all elements of our restrictions throughout the supply chain. Now, I will stop there because I realise I have gone over. So thank you very much.
That's great. Thank you, Samantha. So with that, we will move on to our final panelist, Naomi Han from WWF in Singapore.
Hi, hi everyone. Can you hear me?
Yes, we can. Yeah, we can.
Great. Okay. Thank you very much for the introduction, Chris. So I'm Naomi, and I'm a Sustainable Finance Engagement Manager. I'm part of the WWF Sustainable Finance team in Singapore. So I'm happy to have this opportunity today to share some insights based on the work that we've done in the region together with banks on ESG issues, and with seafood also being one of the main topics of discussion. So I'll try to keep my presentation to 10 minutes so that we can have some time for discussion after. And I'll talk about what basically the main challenges that banks here in the region face in the seafood industry, as well as what are the opportunities. So looking at the first question, in terms of what kind of challenges ASEAN banks face in assessing ESG risk in this sector, but I think there are a couple of challenges they face, and many of which I believe are not just unique to the seafood sector, but also prevail in other highly sensitive sectors and issues as well. But one of the obstacles that they face perhaps is, the lack of data and transparency, and also the lack of proper regulation or enforcement. And these two topics I recognize have already been widely discussed and debated in multiple occasions, so I don't want to spend too much time on that. But obviously, with regards to the seafood sector, limited disclosures by seafood companies does make it very difficult or challenging for banks to determine the materiality that they may be exposed to. So for instance, information like what kind of species are being harvested or sourced, in which geographies, are they from well-managed sustainable fisheries? Are they safe, labor-free? Banks actually need access to this information to understand what risks they are exposed to and how to mitigate them by engaging with their clients. And another challenge that I want to highlight here, I find it's perhaps more fundamental to the issue at hand, is that banks in the region, they may not first of all fully comprehend the interlinkages within the seafood supply chain, who are the actors in the supply chain, and secondly, they may also not recognize that such risk exists across the supply chain. So in the first point, and that's what Darren from Thai Union mentioned as well, right? When you think about a seafood supply chain, it's not just about the fishing vessels or your aquaculture farms. There are also the midstream or downstream players like your seafood processors, your retailers, your warehouse, your traders that are sourcing or procuring seafood. And obviously, they are also very much exposed to ESG risk, and they are being financed by banks. So it's very important for banks to identify these clients in their portfolio to do a proper risk assessment. And then secondly, in this region as well, I think that some companies have the perception that they may not necessarily be exposed to such risk, particularly if they are a few steps removed from the upstream activities like the producers. And the reason why is because there is actually, looking at the region as compared to, let's say, in Europe or the US, there has been quite little noise around seafood issues coming from the media, from consumers and civil societies. Although, of course, we see more reports now, focusing, for instance, on modern slavery, on fishing fleets in Thailand, and a couple of reports directed to Thai Union. But apart from that, I mean, there has been quite little scrutiny on the buy side. So even consumers themselves here in the region are not yet fully educated, about sustainability issues in the seafood industry. So, even in Singapore, if you were to walk into a supermarket, you find a couple of MSC or ASC certified seafood product, but there's no education or no promotion around why consumers need to buy sustainable seafood. So hence there's little or minimal acknowledgement that buyers or other downstream, midstream players face ESG risk too in supply chain. So obviously, as a bank, if you're financing these clients, there could be a false perception that these are low risk clients that you do not really have to engage with, or you don't have to do a lot of hand holding. And I think that mindset really has to change, because as Darren mentioned as well, it's really in the interest of all these players, be it a seafood processor or retailer, that there is sustainable source of seafood. So then that leads me to the second part in terms of what banks in the region can do more to understand and to mitigate risk in the sector. So, first of all, I think this has been mentioned by the last panelists, is, we really have to encourage banks to engage with their clients, because only through engagement can you really understand what kind of issues or challenges your clients are facing, what kind of steps you can take together with your clients to ensure that their business operations also generate sustainable outcomes. So Samantha has mentioned this couple of times, or in terms of the lending policies. So banks can require clients to achieve sustainability standards such as the ASC or MSC, or at least have time-bound action plans. I think that was mentioned as well, or even stepwise approach such as your FIPS or AIPs. They can also include other criteria into lending policies that include like excluded activities. So I won't go on so much of that because that has already been elaborated on. And so the next point I want to make is that using tools like banks understand what kind of risks they need to look out for in the sector, how they are being benchmarked against global and regional peers, which I think is very useful to understand how they can strengthen their policies, what kind of criteria they should include. And again, I want to emphasize here that, we cannot look at risk without looking at what are the opportunities. So in terms of the engagement with your clients, I think that's an opportunity to discuss with your clients what kind of solutions they need to undertake in order to improve on their performance and help in terms of creating new types of blue financing products. I will come to that in a minute. And another thing I believe banks should do is to obviously better understand what are the key ESG risks in the seafood sector, which is what I mentioned earlier. So having open conversations with NGOs or other organizations like industry associations, through meetings, through seminars, through reports, can help banks to better understand what are these issues on the ground. And so hence I believe that banks need to shift away from the mentality that the seafood industry is a high risk sector, which I think that's the case here with many banks in the region, but instead really look at the size of the opportunity in this industry, which is set to grow. So with regards to the third question, right, if you look at the context that we are currently at, seafood production will have to increase. In the region, we have millions of people relying on the seafood industry for their livelihoods, right? Seafood production, seafood is also key to our food security in terms of protein needs. I think seafood contributes to nearly 40% of our protein needs here in ASEAN. And, with, wild-caught fisheries being relatively stagnant at the moment, we are seeing that aquaculture has to grow significantly in ASEAN. And it's already contributing or accounting to to a lot of the country's GDP. So in 2014, it was 15% globally of aquaculture from ASEAN. And so this is even predicted to double going forward. And of course, with the increasing population and increasing demand for seafood, I think there really is an urgent need to find viable solutions to improve wild fisheries management and aquaculture productivity. So as a whole, this really presents a lot of opportunities for banks to work together with their clients and other partners to look for innovative types of solutions to address the challenges that we face. And two things I want to mention here. One is through the technological aspect, and that's, I think Darren mentioned a couple of technologies that Thai Union, for instance, is already developing. So obviously for corporates to improve on their sustainability outcome, they need to invest in better technologies to address ESG risk. So it could be better fishing technologies, vessel improvement projects, traceability solutions, for instance, to track fish from the ocean down to the supermarket. And this will help tackle many of the challenges that I mentioned previously. And if we look at, for instance, the aquaculture industry, there are also additional steps that we can implement to reduce the impact to the ecosystems. So, for instance, how can we address, problems like, pollution, the clearing of mangroves, the use of antibiotics and other biodiversity related issues. So, for instance, here in Singapore, we have, some of the fish farmers that have developed high-tech fish farming technologies that actually allow them to farm fish in tanks that are stacked above one another. So that's what they call, vertical fish farms to, overcome the issue of space and the issue of yield. So, this could be sort of the new technologies or solutions that can answer many of our problems. And, banks play a role because they can finance this kind of technologies. They can finance SMEs or entrepreneurs in the seafood industry in order to invest in these technologies. And the second point I want to make here is, there's also a lot of discussion now about, the innovative types of financing solutions or blue financing solutions that can increase the access to capital for corporates or even for smallholders to improve on their sustainability performance and to invest in technologies. So, for instance, we've seen the number of blue products, and that's also mentioned by the previous panelists as well, on the market recently, with blue bonds, with blended finance types of products, with funds. So we've already seen a couple of products being developed in the market. So I think clearly the size of the opportunity is huge. And if I can just spend the last 2 minutes or so, if we take one step back, right, looking at how the entire seafood industry actually contributes to the overall blue economy, and blue economy being defined by all economic sectors that have a direct or the seafood industry plays a crucial role in supporting economic growth, social inclusion, and at the same time protecting ocean and marine resources. So if we understand what are the interlinkages between all activities indirectly or directly contributing to ocean health, we can really capture the full size of the blue economy. So for instance, we also have to address the other issues that impact seafood production. So for instance, failure to attend to other issues within the ecosystem, such as plastics or impacts of climate change, whereby you have ocean temperature rise or coral reefs dying due to that. Coastal development, whereby mangroves are being removed or coral reefs being destroyed. These can also lead to fisheries collapse. So hence the point I want to make here is that there are many other sectors and many other issues that we need to address that will contribute to a healthy and sustainable seafood industry. And I think that's how banks should really approach the issue, looking at the bigger picture rather than looking at, of course, just one or two clients you have in your portfolio from the seafood industry, but really looking overall at the blue economy. How can you contribute to that? That will really ensure both our job and food security in the region. So with that, I know I've already gone a bit over time, so maybe we can have the last couple of minutes for Q&A.
Yeah, no, that's great. Thank you very much, Nemin. Yeah, so we do have a couple of minutes. So if there are any questions that those listening into the webinar would like to put to the panelists before we have to jump off the call, then please do step in now. I'll give it just a few seconds to allow anyone to step forward with a question.
Chairman, it's Rob Appleby. Can you hear me?
Yes, I can, Rob. Yeah.
It's a question for the lady at Standard Chartered Bank. I was intrigued by the conundrum that Standard Chartered faces with prohibition of lending to certain sectors and certain industries. And then the example given, which was a company who might be in the sector that is acceptable, but also has, let's say, a couple of shark fin restaurants or a couple of supermarkets that sell shark fin. How do you navigate that line without blurring it? And how do you effect essentially good practice within that company without actually lending and engaging with that company? If you ignore it, you have no voice, but if you engage, you've just blurred the lines. Can you explain that?
Samantha, are you able to answer that? I don't know if you're on mute. It's possible that Samantha has jumped off the call.
Yeah, if you would like, I could take it since we have the exact same problem.
Thank you. Go ahead.
Yeah, so from our side, we first have the exclusion principle. So in certain cases, we simply do not work with some companies. As Rabobank, of course, we finance also wild catch, aquaculture, and fisheries, and this happens very often that there's a certain part of the business that you are not comfortable with. So at one point we have just exclusion, but as you rightly say, it could happen later, or that you do need to have a voice, and in that case we follow the engagement procedure. So the bank will actively engage the client in a dialogue and try to create an improvement path, and to a point where we would even organize a roundtable where sometimes you would need to bring multiple clients on the table to discuss how to move forward as a group, because quite often let's say a single company would not be willing to make any changes because that would make them basically uncompetitive comparing to others. But if you engage with a larger group and then also seek the help of WWF, who could be very instrumental in this as well, then you could go towards a path of improvement. So I hope that answers your question somewhat. But yeah, it's a very difficult situation, of course.
Thank you very much.
So we are past the hour. If there are any further questions, then by all means, please put it forward now. Otherwise, in the absence of any further questions, that probably brings us to the end of the webinar. So it just remains me to thank our panelists today, Goyan Nikolic, Darian McBain, Samantha Bromley, and Naomin Tan for your time. There's an awful lot of very interesting content in those presentations, and certainly grounds for following up in due course. So certainly something we'll be in touch with in the future. May I also remind you to visit WWF and Global Canopy websites for further information on sustainable seafood for the financial sector. And please do take a look at the Financial Institution Guidance document and our briefing note on the business case for sustainability. So thank you very much for everyone for taking the time to join the webinar, and it's goodbye for now.